Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. That's right, your roadmap to financial freedom. Inside, we're going to be discussing things for absolute beginners who never even heard of the stock market or don't know what the stock market is. We're going to teach what is the stock market, what is a stock, what is an index. We're going to teach all of that. We're going to talk about options. We're going to talk about futures. We're going to talk about fundamental analysis, technical analysis. Speaking of technical analysis, we're going to take a deep dive into the ICT concepts. We're going to discuss how to figure out how much you need as an individual to save for your personal retirement. We're going to talk about retirement portfolios. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you. It's dropping on August 6, 2025, which is my birthday and my youngest son's birthday, for $69.99. Yes, $69.99 for all of this here. Mark the date, set it on your calendar, remember it, and I'll see you on August the 6th. Good evening, everybody. Hopefully y'all doing okay. I actually just got off a FaceTime with my wife was FaceTiming us. She's getting her and a friend going to the Cowboy Carter tour. And I was sitting up there, my phone started ringing. I'm like, so I pick it up and I'm like, what's up? And she was like, you on live? And I'm like, I'm getting on right now. And she was like, where the kids at? I'm like, Timothy, pick up the phone. He does like, why are you screaming my name like that? I'm like, pick up the phone, man. They always be sitting up there ignoring the phone. Anyway, good evening, everybody. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just big spot if you don't hablo español. Don't get on the side. It's just big spot if you don't hablo español. And you are in tune to the Intraday Price Action Recap. As y'all saw by my lovely little introduction video, this episode of the Price Action Recap is being brought to you by the Smart Money Manuscript. Yep. I already played a little promo of what the Smart Money Manuscript is, so I will not dive overly deeply into that, but it's coming on August the 6th. Y'all make sure y'all check that out. If you missed the little introduction promo, I'm proud of my little rushed promo. I'm not gonna say it's rushed. I was in here trying to record it the other day, right? Speaking of never a dull moment, it's never a dull moment because I'm back here trying to record it, and it's like I'm like, okay, I'm gonna do a promo. I'm gonna write out a script. I'm gonna read the script off of. Oh man, I skinned up my wall back here when I was taking some screws out. I got a little shelf here that my camera sit on, and I wanted my camera lower, so I took the shelf off the pieces and then I mounted it to the bottom, right, so that the camera sit lower. But when I was drilling, the drill head, I had to drill as close to the wall, so as the drill was spinning, it was hitting the wall. And I can see that I knocked some paint off the wall. I have to touch that up. That's gonna bug me. It's under the little shelf, but that's gonna bug me. It's gonna drive me crazy. Let me turn my fan on, man. It be getting hot back here because I be behind this green screen and it's you know, turn my fan, put my fan right here. Ooh, that feel better. Yeah, be hot back here, man. I'm behind here, got these lights back here. Y'all can't see the green screen, but the green screen go all the way up to the ceiling. It's like all the way up to the ceiling on the green screen. If I tilt my camera up, you can see. Oh no, y'all can't see it because it's a green screen. But if I tilt it up, you can see the ceiling. You can see where the ceiling is. So the green screen go all the way up to the ceiling. So I'm like blocked in here. Now let me get this back right. All right. Okay. So I'm like blocked in here. And so the fan is on the other side of the thing, the ceiling fan. So don't no air be circulating back here. The AC vent over there, the ceiling fan back there. I'm back here with these lights and the computer right here. I just be hot, man. Y'all ain't tuned in to hear all of that. What was I saying before I got sidetracked? Um, I don't know. Who up in here, man? I see Marco up in here. What's going on, Marco? Shout out Marco, man. Mr. Fade, the fade all-time highs. How you doing there, Marco? You still fading all-time highs?
Yes, sir. Getting busted in my head. My lips are all busted and bleeding. My eyes are swollen.
Man, come on, man. You ain't learned nothing from who was that? Who was that was fading? And I was like, this ain't the time to be selling. You should have bought the on this day. This ain't the time. Who somebody in the chat had pulled up was like, I bought puts because I thought we should be going. As a matter of fact, they said the same thing Marco said. Marco said, I figured we up here, we got to come to
Well, what's good is I'm good until August 15th.
but Marco, I'm glad we having this conversation. This right here, this an honest conversation. I'm glad we having this conversation because we've all been there, right? And we do stuff off of how we feel, and then we justify it by saying, okay, I got time, right? Which is true. You got time, you got to August 15th, I think you said, right? And in time, it may play out and you may, you know what I'm saying, come back and let's just say hit your full target, or you may come back and get out in the green. But we have to start to think about the capital that we're tying up for no reason, right? We're holding on to losers, hoping to scrape out, and not just saying this is the case for Marco, but let's just say if little Timmy Rogers faded the all-time highs because he just thought it's got to come down sooner or later, right? And it takes what we was August. Let me look at my calendar here. Smart Money Manuscript coming on August the 6th. Y'all make sure y'all check it out. All right. So today is the 10th, August 15th. So they 1, 2, 3, 4, roughly 5 weeks, right? Got 5 weeks to see what happened, right? So let's just say it takes 3.5 weeks for it to plan out, right? It takes 3.5 weeks for it to pan out. And let's just say over those 3.5 weeks, during that time, right? Get out of the way, Smart Money Manuscript, right? Because this has happened to me many times before. That's why, and it's Not a jab at anybody, not a jab at Marco, not a jab at anybody, right? And this is the same type of conversation I had with I can't remember who the lady was who had that same situation where she was like, oh, you know what? I'm just going to go ahead and cut my losses. You know what I'm saying? Because she was like, I still got time, right? But let's just say during that 3.5 weeks, right? Let's say the position gets down 60%, right? Let's say it got down 60% during those 3.5 weeks because I'm like, hey, I got time. This is an option. Uh, Kiki and Stock Baby taught me, you know what I'm saying, be willing for it to go to zero. Don't never invest nothing that you're not willing to let go to zero. That's what Kiki and Stock Baby taught me, right? Don't willing to invest unless you're willing to let it go to zero. So it gets down to 60%. Well, you know, and there ain't no shade at nobody. Kiki, my little sister. I ain't talked to Stock Baby, my dude. I ain't talked to him in a few years though. Last time I talked to him, me and my family was on vacation at Great Wolf Lodge, like a few years back, right? Back during that time, it was around Father's Day. I don't know, old school gang remember, but remember the time when Boyd came on my live and he was trying to explain his side of the whole beef between Lex and Kiki and PDub and Boyd and all everybody, and you know, somebody put up my live and started disrespecting me, and then I started going off. I cussed him out of the live stream. It was like right around Father's Day and Juneteenth. We was in Great Wolf Lodge. Old school gang, remember that? Y'all remember that? But anyway, I get down to six within that 3.5 weeks. It get down to 60%, and then all of a sudden we have a massive drop. The market just tanks. We got a massive drop, and then I happen to get up 30% on my trade, and I say, you know what? I'm back in the green. I'm gonna close for this 30%. I made 30%. Right? Is this really a win? Right? Is that really a win? No, it's not. Well, Tim, you made 30%. You came out in the green, right? But I was down 60%. I was down over half my position. I had capital. Let's just say I bought this position and it's about a month out, right? And let's just say I paid $600 for this position, right? Let's just say I paid $600 for this position. It was, you know what I'm saying? It was a month out. So a month out, you're going to have to pay a little bit of money for it, right? Unless you pay by like way out of the money. You know what I'm saying? But if you get like at the money or something like that, or something very near the money, you're gonna pay a little bit of money for it. And it's probably gonna be more than $600 if you buying like the Qs or the SPY, right? And so
Guilty.
and guilty. And so we 600 times 0.3, right? So I profit $180, right? That's my profit that I closed out. I made $180, right? But 600 times 0.6. But I got down as much as $360. Right. I got down $360. Right. So that means I actually, where did I go? If I would have where my get out of the way, there it is. Okay. If I would have now, mind you, now I got down this much and I cashed out that much. That means that that position actually moved
90%,
five,
right?
that it actually moved $540, right? So 600 times, I mean 540 divided by 600 is 90%. that position actually moved 90% over from that 3.5 weeks when I got down and then went back up. It rallied 90%, right? So that means I had capital tied up, working extra hard for me to make 30%, where if I would have cut my losses before it got down, you know what I'm saying, before it even made, you know what I'm saying, let's just say, let's give a big stop loss, right? And say 25%. That's a big stop loss on a position in my opinion, right? 600 times 0.25, right? $150, right? So if I would have, let's just say I cut my losses at 25%, right? So I cut my losses at 25%. That's $150 that I'm down, right? Off that position, right? But I believed in the move, right? And I waited until I got a signal for me to sell what I'm supposed to sell. And let's say that signal came around this time right here, right? So 600 minus 360, because remember I went down 60%, right? So now that position is $240. All right. Let's just say I didn't get it at 240. Let's say I got it at 250, but I got it around the time when my signal gave me the time I'm supposed to buy. So now I buy it for $250. I'm in at 250, right? And then it went back to where I would have been up 30%, right? So let's go 600 plus 30%. So now it's at $780. That's what the position is at now. The position is at 780, right? $780, because I believed in it, but I took my losses and then I bought the position when I got the signal, right? So now 780 minus 250 equals $530. So now that's what I made when I cut my losses and entered when I got the signal, instead of tying up my capital and letting it ride. So now 250 divided by 5. Oh, no. 530 divided by 250 is 212%. So now instead of making 30%, I made 212% because I cut my losses, entered when the signal told me to, right? Cut my losses at 150, waited for my signal, got back in at 250 with the same position, and then took my profits at the same price point here. But instead of being 30% and making $180, it was 212%. And I made 550, and then I take that 150 that I lost away from there. All right. 530, it was minus 150, and I'm up $380 in the I'm in the green $380, as opposed to being only in the green $180 with a whole bunch of sweat and hope and praying. You know what I'm saying? This right here is just the beauty of cutting your losers quick and letting your winners go. But we get so emotional and so caught up with not wanting to take a loss that we risk going to zero. You know what I'm saying? because I love people to death, but I was conditioned the same way. You got to be willing to let it go to zero when you invest the money. You got to be willing to let it go to zero. And in my mature and sober mind, that's the stupidest thing I ever heard in my life. Stupidest thing I ever did. Stupidest thing I ever abided by. Right. So even with options, especially with futures, but even with options, right? We want to, when you get into the position, you know how much you're willing to risk when you're getting out, what invalidates your bias. Get out at that invalidation point. If you was in early and it's still valid, you was just in early, get back in, but get out at the invalidation point of that trade. When that trade shows you, my fancy dance ain't turned on. When that trade shows you that it's been invalidated, get out. Your stop loss has been hit, cut your losses, and then re-enter when the trade is valid. And if it invalidates and you realize I'm on the wrong side, don't just jump back in. Wait for the entry for the opposite weight. Because if you jump back in, right, it can pull back on you and stop you out again. Wait for the right entry. You see what I'm saying? Because if you are, let me go to the chart and explain this part of it. I hope this is like crystal clear to somebody, right? I hope this is crystal clear to somebody. I'm turning on everything except what I want to.
No, it's very clear, Tim. And not only that, I could have bought 2 contracts, right? Had I gotten out super
Yeah,
early, and
yeah.
still
If you
got
got,
in, then I would have got 2 contracts instead of
yeah,
just one.
you could have got it. You could have bought more. You see what I'm saying?
More. Yeah.
And then that would have grown your money exponentially. You know what I'm saying? It would have been exponential gains. All right. So, and what I mean by don't just jump in when it turns around, right? Let's squeeze up the chart here. It's fine if we look at these hourly candles. Okay. Let's just come here, right? Let's just come here. All right. So this is fine here. Let's say we prices here, right? We talk about not just jumping in when it comes. Okay. So prices here, and let's just say we short we short here. We're gonna short here, and we're waiting for price to come down, right? So we short here and wait for price to come down, but it comes and stops us out above this high right here, right? Short here, price dealers around, and it goes up and it stops us out above that high. Now we're stopped out, right? You don't want to just jump back into calls because price could pull back on you. Even though it went up, price can still pull back. You see what I'm saying? And if you get stopped out here and then we come back in and get into calls there, now price is pulling back against us in the calls, right? And now we're deep underwater and we've either got stopped out again there. If we tried to hold it longer, we got stopped out for even less profit. You see what I'm saying? But if you wait for price to tell you that it's ready to go back up, right? And we just acting like these daily candles here, right? We got us a bullish breaking market structure right here. So you come back and say, okay, the next day I'm buying here because I got a bullish breaking market. This just what I'm saying. Like, you know, it's because when you trading options, you know what I'm saying, you may do it based off what the daily candles are doing, right? So now there you go, it runs up and you've gotten, you know what I'm saying, a entry based off what the chart is telling me and not based off what I feel, because we shorted because we felt like it was time to short here and it went against us. And then you said, we said, oh, I was wrong. So we entered calls just because we got stopped out. And then now you either got stopped out again, or you're holding through something because you're mad and you don't want to be wrong twice. And then now it fights back. You're still underwater. It's going against you again. And then finally it gets back up. But now by the time it gets back up, all of this time has eaten into your premium. And so now when you get up here, you're barely back in the green. Whereas if you would have waited for the right signal, you would have been way more profitable. You know what I'm saying? And like I say, we get into the habit of options give us time, right? Oh, I bought time. I've used that excuse. I got friends that have said that. I got people that used to be friends that have said that. Oh, I bought time, so I'm good. No. If when you start saying I bought time, I'm good, you're telling yourself I'm holding on to a bad trade. And we got to start being honest with ourselves. I bought time, so I'm good. We're saying I'm holding on to a bad trade because I don't want to be wrong. Right? I'm just going to hedge against it. I'm holding on to a bad trade because I don't want to be wrong. I'm going to hedge against it, make a little bit of money, and then let this fight back. Because if you hedge against it, once you start going back in your favor, now your hedge is in trouble. So you're gonna have two bad trades, or you're gonna close the hedge out, make a little bit of money off of that, and still watch this one struggle to get out of the red. Right? I'm holding on to a bad trade because I don't want to be wrong. I don't want my win rate to suffer. But you're tying up liquidity. You're tying up capital, should I say. You're tying up capital in a bad trade. Right. Hopefully that helps somebody. Right. And like I say, Karen, that was her name. That's who it was, Karen. Yeah, and when me and Karen was talking about it, I was like, ain't no jab at Karen. You're already in the position. Let's go look at the charts and see, you know what I'm saying? If it's something you should have done, is there a possibility? You know what I'm saying? And looking at Karen's trade, I was like, hey, if you're gonna stay in it, you can try to hedge, but this ain't the time to be selling based off what the technicals are showing us. You should have been buying this day. And ever since that day we talked about it, nothing could stop me. I'm all the way up. The market ain't pulled back yet. I think Karen said she cut her losses. I think she said she cut her losses, but you know what I'm saying? We want to act off of what the chart, what's in front of us. We want to trade the market we see, not the market that we want. And speaking of the market that we want, right? I meant to share some class participation with y'all today, right? And since I didn't get a chance to, we'll do the class participation now. This thing I always be thinking I'm raising my hand. If you're looking at my gestures and if you're thinking I'm raising my hand, I can't lower my hand unless I'm not sharing my screen. So it's just gonna say my hand is up. Oh, I'm sorry, y'all, man. Who up in here? Marco, yeah. I said what's up to Marco. Lump up in here. Yolanda up in here. Let me stop sharing my screen for a second so I can lower my hand and then I can say what's up to everybody. Yolanda up in here. Hopefully Yolanda don't be coming off mute today. Y'all know how Yolanda do. I got the link pinned to the top of the chat and YouTube. If you want to pull up on Zoom and ask a question or just share a comment, feel free to do that right there. The link is pinned to the top of the chat of YouTube. We got Kim up in here. We got Here to Learn and Share up in here. We got Sarah up in here. Shout out Sarah. I know Sarah from Tremaine's room. Shout out Sarah. We got Honey. What's going on, Honey? We got Ron up in here. What's up, Felicia? Karen say, okay, I made money today also, but the market was moving up so slow. That I'm glad you said that because I'm going to talk about. I remember when I had started saying trade the market you see, not the market you want, right? That I was about to get into that, about the market going up slow, but we're gonna talk about that. But congratulations. And hey, I see more numbers than I see names, but them all the names that I see, so that's all I'm gonna say. What was I about to share? I said I was gonna share. Oh, class participation, right? Gang. Click on the link, pull up inside the Zoom, and don't be talking about I can't unmute, right? Class participation time. I meant to share this today, but I did not get a chance to share it. And then I left the house and then it slipped my mind. So this right here, right? I was going to share this right here. This is what I was going to share. Let me blow it up pretty big for people that's on devices there. If you see, all right, so this buy side here. Matter of fact, let me do this right here. Let me go over to, I'm gonna just go to the charts and I'm gonna use the chart, right? But you see, this right here is the like the trading view. Y'all know I chart on trading view and I trade inside Ninja Trader, right? And if you look here, see you can see the little green carrot right there with triangle, the little green triangle there, right? You notice little green triangle there, entering there on that little volume imbalance right here, right? Entering on that volume imbalance there, right? You can see like the entry price there of one, right? Going along there. And then you can see the exit there on this little doji candle, seeing I was stopped out in profit at 23,058.25, right? And then you look over here. This is you can see the position that I had. This what my position was. And this right here was my target. And then you see here, right? You see what I got right there, right? Right. Y'all read that. Y'all got a reading on that right there. Right. Now, seeing everything, and then you see the price that right there is 23,058.25, right? Does that sound familiar? Yes, it should, because it's right there, stopped at 23,058.25, right? Still sound familiar there. And you see what I wrote right there. All right. Now let's pull up the chart and let's recreate this. I ain't gonna say recreate, but let's just go to the chart so I can I can annotate stuff on the chart, right? Because I can't annotate nothing on the picture. And that was like right at pre-market. So let's find, let's see. I'm gonna go back to like, let's go here. This should be enough here. Now, I know it had to be before 9:15. It had to be before 9:15. Yes, it was, because that's the high I was going for right there. I remember that high. Okay, so while I mark this, y'all tell me what was the class participation, right? While I mark this up, y'all tell me the logic, the reasoning behind the entry and exit and the protection at the stop. Did y'all see? Do y'all understand what that meant, what I had marked there? Right? Y'all understand that, what that means right there? Somebody tell me what that means there and why. The reasoning behind it. No, that's not a target. The target is here. right? The top of the thing is the target. The target is that high, right? The target is that high, right? This is the stop loss down here. The entry, okay. The way the tool works is this gray line there in the middle, in between the red and green. That's your entry. The bottom of the extreme of the red is your stop loss, and the extreme of the green is your profit target, right? Right. Extreme to green is your profit target, right? Y'all trying to make me read. Get over there in the Zoom and unmute and talk to me. Right. So I need to mark this right here. I ain't got time to keep looking back and forth right now. All right. So you move your stop there. Yes, I move my stop there now. And why? Why am I moving my stop there? All right. Let me show you the picture again there. I'm gonna put the picture up here while I work on this right here. All right. The answer is there in front of you, but tell me why.
Because the previous day close can also, as a previous session close, and it can act as an anticipatory reaction point. So you want to make sure
ding, ding, ding. Ding. I ain't got my soundboard open. Let me hold on. I got to get my soundboard so I can give you the proper, what's name here. There you go. I'll give it up for Yolanda for coming off mute and coming through with a hard hitting answer. Yes, shout out Kim. Was that Kim? All right. Shout out Kim for pulling up with the hard hitting answer too. All right. So what we know about them four pillars. Those four pillars are key points in price that the algorithm is going to seek out for different reasons. They can act as drawers. They can act as draws. They can act as turnaround points. They can act as support levels. They can act as resistance levels, right? Those four pillars are all you need in price action, right? They're all you need in price action. Okay. And as I map this out here, there's one tick down. Okay. All right. So 1, 2. So we scoot this over. Green, other one. And that candle was actually red when I took the screenshot, but it ended up being a green candle. All right. So Okay, so this candle here, scoot this over. This candle here was actually red when I took this screenshot, but it actually ended up being a green candle. Now, right? Can y'all see? Make out everything on the screen, right? Can y'all see what this says over here? Somebody tell me what this says over here if you can make it out. Right over here in the corner. Can y'all see that? Is that too little?
Well, 7 a.m.
Okay, 7 a.m. All right. This up here. What's this up here?
The buy side liquidity.
Yes. What's this down here?
Sell side liquidity.
Okay. Now, why do I have this and this marked out as sell side liquidity and buy side liquidity right there?
That's your dealing range.
And what's significant about this dealing range, right? It's a dealing range based off of what?
Whatever that 7 a.m. is for.
The start of the New York session, right?
Okay.
7 a.m. That starts your pre-market time, right? Time. Let's shout out pulling up with the hard hitting class participation, right? 1, 2, 3 out of 4. That's good. You pass. All right, 3 out of 4 that you pass. You got 75%. You get a whole diploma with that. All right. So starting at 7 a.m. Right. Did y'all see the thing I put in the Discord today? I was like, I had been doing 6 a.m., but it's like the 6 comes from 6 p.m. in the Asian time. Now, it all works out because if you understand how to put all the sessions together, price is price. You know what I'm saying? But I shared that because I always want to give the correct information that Michael teaches, right? And if you're trying to trade the New York pre-market, right, your time is 7 a.m., not 6 a.m., right? 7 a.m. is the start. Well, Tim, why does 6 a.m. work? Because 6 a.m. is part of London session. Because if you put all the sessions together, Asian, London, and New York, you got the full day. You see what I'm saying? So as long as you're doing algorithmic theory throughout the entire day, the levels are going to work, right? But when you're talking about, you want to call a duck a duck. You don't want to, I don't never want to put nothing out as misinformation. So your time is starting at 7 for the pre-market. All right. Now, so we got that right there, right? 7 a.m. pre-market open, right? 7 a.m. pre-market open. Now we got that. Okay, now looking at what we have here, right? Based off what we see right here, 7 a.m. pre-market open. We said that was sell side, that was buy side, and we said this was our dealing range, right? What's significant about this sell side? This low is what? And this high is what? Based off of our time, right? And what makes a dealing range? That's your answer, right? Right. This low is what? Based off our algorithmic time. This is our what? And this is our what? You can visually see it. You can visually see it. So from 7 o'clock, this is what, and this is what. Come on now, Slater. Even you know this right here, Slater.
That's our pre-market low and high before the session actually starts. Significant for the like you said, the beginning of the New York session.
Yes, the low and high, but it's our what high, right? This is our what high and what low.
Opening high and opening low.
She already says the pre-market low and high, but what makes a dealing range? you anchor your range by based off what?
We swept liquidity of a
Nah,
previous.
you're going too deep. Just visually look at it. Visually look at this right here. What about this high and what about this low?
Is it the external?
External is in the ballpark, but what makes it the external, right? Because this is what that is. What's that high and what's that low? What's the difference between this low and this low based off our dealing range? And what's the difference between this high and this high based
It was
off?
before it took off before it.
Is it the hey, Carter, stop. The kill zone?
Ask Carter. Carter knows.
What you talking about? External liquidity is what you're looking for?
External is in the ball range, but what makes it external? Like what make like if what's up here is external and what's down there is external, right? What is it about this right here? That's what I'm saying. Like, don't try to think too deep about it. It's right there in front of you when you visually look at this screen, right? If you visually look at this screen, get out of the way, pre-market. Get out of the way, pre-market, right? When I stretch this out like this right here, right? When you look at this and you look at this, what is different about this high and this low as opposed to every other low and high, right? From here that way. Let me do this right here. Let me help y'all out a little bit, make it a little bit clearer. When I do that, stretch this out like this right here, right? When you look at this, don't nobody look at this. Slater, where you at? What is different about this high and this low as opposed to every low and high?
I hear you. Somebody rewind.
Yeah, John, way back there. John, you need to catch up. You ain't live, John. You way behind. John going back trying to rewind and look for the answer.
So what you looking for in this dealing range, man? What you looking for?
Y'all
right
keep
here,
you got okay. Somebody tell me what makes a dealing range, right?
When you set a high and a low.
Okay, when you set a high and a low, give me some more. We set a high.
Okay, when you take
a low,
liquidity,
you have to take liquidity.
Okay,
on both sides.
All right, so I take out liquidity there, right? Yeah. And I create a new liquidity pool. Yeah. And I come up, I take out liquidity there, and we keep extending up there, right? Now we got this high and we got that low, right? After this time.
Is it the macro?
No, can you visually see the macro on the screen? Physically looking at the screen. What is it about this high and this low that based off of our pre-market time, right?
I don't know, tell us.
Okay, so coming into this time, we're waiting for price to establish what?
A dealing range.
Establish a dealing range. Right? And if Venus, you coming in to tell us, John, you coming in to tell us?
I was going to say daily high and daily low.
What's a daily high and daily low? Talking
liquidity,
about that. That day for a daily range. What's the daily high and daily low?
Oh, it's the session high and low.
What's the session high and low for a session? What is the session high and low?
Liquidity targets, possible
looking at this screen, right? You can physically see that this is
the buy side of the curve. Shoot.
Is it the opening range?
Always is a bearish dealing range. I mean, the bullish dealing range.
Let me see something. Chris, come here for a second, son. Just peek your head in here. Huh? Just peek your head in here. Right? Let me ask you a question. Right? Okay. I'm just going physically looking at this screen. Right? Uh-oh. What did I do? God dog it. I done did something wrong. I done did something wrong. Okay. All right. I told it be that's why I got my fan on.
I'll pick my head in here. I'm already feel that's way.
And that's how I feel when I be coming in your room. I'll be like, son, it's burning up back here. I got my little fan right here. Okay. So if I okay, let me back up a little bit more. Okay. Okay. So, all right. All right. This right here is 7 o'clock open. Just a pretend I moved it, but you say 7 o'clock open here, right? Mm-hmm. And at this red line there, this right here is that's a swing low, right? Where the red line is connected, right? It's a swing low, right? Because it swings like this right here, right? And then up here where the green line is connected, that's a swing high because it swings right there. Okay. Now, physically looking at the screen, right? Physically looking at the screen, right? This low and this high are drastically different. Yeah, they drastically different, but what is this low and what is this high when you compare it to, let's just say, this low and this high? This one is what? Just physically looking at the screen.
External liquidity.
It's like a bigger like change in
but I'm just looking at this screen here, right? I got a high here and I got a high here.
A long-term high.
What's the difference between these two? This high is what?
The high is after the low.
It's the what?
After the low.
No, it's the
high.
External.
What did I say?
You said, what'd you say? Did you say the highest?
High after it.
Is it the higher highs and lower lows?
It's the
highest.
It's the highest high, and this is the
lowest low.
The lowest low, because he said the highest. He said that's the highest one after the low, right? This is the highest high and the lowest low. So yeah, that's why I got my fan. Okay, thank you, son. Thank you, son. I just want to know.
You making fun of us now.
No, I was just trying to see if it was too difficult. So I just asked somebody who don't know nothing about trading.
I think it's how you were asking the question.
No. I and somebody said the daily. I say, what is the daily high and daily low? So your daily high and daily low, that's the highest it went that day and the lowest it went that day.
That's obvious.
I said, what's the I said, based off our dealing range, this is our what that high and this is our what low. External liquidity. This is our that's why I always said, don't go to the deep of the ocean. Don't go all the way to the bottom of the ocean. When I just physically look at the screen, right? Just physically look at the screen, and it's a lot simpler than we try to make everything. Like we try to make everything like overly complicated, right? It's a lot simpler than we make it out to be, right? We make it complicated. We you know what I'm saying? God dog it, I did it again. I did it again. All right, we make it complicated. Now that we've gone through all of that, right? Let's come back here. Class participation, right? So I forgot to put in my line, right? Go to regular trading hours, right? And then I come here to regular trading hours and click there. And Day, close, lock, profit. Proof it. Slater gonna pretend like he can't hear me. He gonna pretend like he can't hear me because he don't want to unmute.
Did you call me, Tim?
Now you talking on your phone?
Hold on.
Nah, I ain't call you. Why can't I see my little? Well, let me go one step at a time. That's why I keep jumping to the end, because my one step at a time button ain't there. Oh, yeah, that is it. I don't know why I thought it wasn't there. This is all out of whack. What in the world happened? Am I tweaking? Am I tweaking? How did everything get all out of whack? Oh, I still got on regular trading hours. Oh, I'm like, wait a minute. Why am I tweaking? Why y'all didn't tell me I still had it on regular trading hours? All right, now, based off everything that we got here, right? Now we understand this is our dealing range based off the pre-market, right? Based off the pre-market time, right? We understand that this is our lowest low, this is our highest high, right? After 7 a.m., right? So right now you see that I took a long position, right? Me taking a long position, what does that tell you my bias was?
Bullish.
Bullish, right? We back at it, y'all. We back. Right. So bias bullish. All right. Now, since my bias bullish, let's back up some. Now that we got our right, we got our range set, okay, and my bias is bullish. All right, my bias is bullish, and we got our range set, right? What do I prefer to see? What do I prefer to see now that my range is set before looking for an entry?
Fair value gap.
One side of liquidity to be swept.
Okay, one side of liquidity being
The
swept.
opposing liquidity. You want the opposing liquidity.
Yes. So I want to see one side of liquidity being swept, but I prefer it be the sell side getting swept because I'm bullish and I want to take out the opposing liquidity first. All right. So as we come in, that's our highest high. That's our lowest low, right? So far, we haven't engaged the high. We haven't engaged the low, right? So now, right, slow this down some, right? Let it play forward a little bit. Okay, now we come down here and we engage the low, right? We come down here and we engage the low. So now the low has been engaged. So now I'm looking for a signature to engage price. Is there one particular signature that I gotta wait for before I engage price?
Macro.
I got macro. Anything else? Is there one particular signature that I got to wait for before I can start engaging price?
Manipulation.
Fair value gap.
Is there one particular signature?
When you say one particular signature, you talking about one particular PD array or something else?
Is there one
You
particular
want to see
signature?
price leave, once it sweeps liquidity, you want to see it leave that area in a hurry.
Y'all listen to my question. Is there one particular signature that I have to see in order to engage price?
I'm gonna say no, not on one particular.
No. There you go. Listen to the see. That's the first thing we do. We go deep as the ocean, right? And we ain't even listen to. All I said was, is there one particular that's a yes or no question? You see what I'm saying? That's a yes, no question. And the reason why I asked that is because I don't want us to get caught in the idea of I have to see one particular thing for price to show me what it wants, right? Michael has a myriad of PD arrays for you to look at, but guess what? All of those PD arrays are on the same playing field. They're all equal, right? They're all equal. Now, you will hear him say that the volume imbalance is his weakest of all the PD arrays, but that's not weak in the terms of importance. That's weak in the terms of price. Through his experience, price will revisit the volume imbalance far more times than it will revisit any other PD array. Every other PD array, if you're right, the price is going to touch it and get out of there for the most part. But a volume imbalance, it will come back to it over and over and over again. That's in his experience, right? But a fair value gap is no stronger than a breaker. A breaker is no stronger than an order block. An order block is no stronger than a rejection block. A rejection block is no stronger than a swing high. A swing high is no stronger than a swing low. None of the PD arrays are better than the others, right? They all connect together in a story. When you're writing out a story, you don't use the same word over and over and over, right? You don't use all nouns. You don't use all verbs. You connect together all these different parts of the English language to paint this beautiful picture. And that's what the PD arrays are, right? The PD arrays are these little things that Michael invented, right? So that we can look at price and understand what the algorithm is coded to do. Now, he says that he made this language up to teach his children because he's bound by NDAs where he can't tell them exactly what the algorithm is doing, but he created a language that can let them see behind the curtain. Now, is that true? I don't freaking know and don't care, right? I don't know and don't care, but I know that in Fort Lauderdale, Florida, they ain't teach me this. And I know I can look at these charts and I can make money off the stuff that he taught me. So guess what? It's freaking true in my mind because they didn't teach me this at Plantation. My brother said we learned everything we need to know at Plantation Elementary. They didn't teach me this at Plantation Elementary. They didn't teach me this at Rickards Middle. They didn't teach me this at Parkway Middle. They didn't teach me this at Dillard High. They didn't teach me this at BA High. They ain't teach me this at Broward Community College. They ain't teach me this at no school I went to in Fort Lauderdale, Florida. I didn't learn this right here. Right? But I can use it to make money. So guess what? It's true. So if you understand order flow and price delivery, there is no one particular signature that you're looking for before you can strike. You're just looking for the order flow and the price delivery to confirm your bias. That's how you got people that trade turtle soups. That's how you got people that trade order blocks. That's how you got people that trade fair value gaps. That's how you got people that trade breakers. Why? Because once the order flow confirms their bias, they're using this one PD array as their entry. They're using a dip below or above a low or high as a turtle soup. Tim, what's a turtle soup, right? I based off the order flow here, I'm seeing that this is my dealing range for the New York morning session, right? And I can see that this dealing range is the latest expansion leg of a higher dealing range. And so price has shown me that after 7, right, this is the sell side I want to see manipulated before going long. So I'm going to buy these sell stops right here below this low and get in on a turtle soup, because the order flow has confirmed for me this is the liquidity that's going to be taken before going up. So I'm going to enter in on a turtle soup, right? Price, play this pass. I think this is what we had it at. That's close enough. It ain't. That's where the picture stopped at, right? So now, before I go into all of that, I'm gonna freeze right there. Now, y'all already told me why, right? Y'all said you moved your stop there, because this could be that right there. And so you want to lock in profits right there, because that could be an anticipatory reactionary point, and it could very well push us back down, right? So I'm locking my profits there. Now, looking at what price did here, right? Why, outside of what we already said, why did I want to lock in profits once we traded past there? Give y'all some more to look at.
But liquidity is up here.
I said based off what we did down here, right? Based off what we did down here. Why do I want to lock in profits there?
We're getting ready to hit opposing liquidity, so the market can reverse. I'm talking about liquidity is up above you to the buy side, right?
I said, based off what we did down here, why am I locking profit there?
Because it could want to go back to get the equal lows.
There you go. We set relative equal lows right there. That's the second half of it, right? We set relative equal lows. But when we came here, what did we do right there? What did this candle do?
Reach for liquidity.
It just wicked. All of it is only wicked below liquidity.
Okay.
It created another range.
There you go. We created a bearish dealing range, right? We created a bearish dealing range here. And then we created
50% of that.
We created relative equal lows inside a bearish dealing range, right? So when we create a bearish dealing range, okay, right, now we have traded back up into a previous day's low, and then we created a bearish dealing range, right? So since we traded up into a previous day's low and then created a bearish dealing range and then set relative equal lows, I'm cautious of these lows when we trade back up into this previous day's low. Me, little Timmy Rogers, I'm trying to protect profits because I don't want to sit back through any kind of drawdown, right? Especially when my trade has moved 17 points. You know what I'm saying? I'm locking in. I'm locking in just roughly. I'm just a rough estimate here. I'm locking in 17 points because my trade, you know what I'm saying? My trade has cleared that. And if this is going to push price back down, I don't want to let it go 17 points in my favor just to find out that I was wrong and get stopped out for 8.5 points, whatever that is, right? So that's why I'm protecting my profits there. For me, I'm protecting my profits because we've created a bearish dealing range, and based off of this bearish dealing range, it's bringing me back to a slight premium, right? That's bringing me back to a slight premium where we're taking out internal liquidity, repricing that SIBI, right, and touching a old close, right? So that's a lot of bearish confluence right there that can easily push price back down, right? Especially when we just created a bearish dealing range. Okay. So that's why I'm locking profit there. This ain't nothing that you have to do. This is just my own trade management, that part of it there, right? That's why I got that there. That's why I put that there on the screenshot. I was going to put it in as like, okay, this class participation, we, try to get y'all to think about these things right here, because it's easy to learn the concepts. It's not so easy to get over the fear of flying, like pushing the buttons. But once you do that, you know what I'm saying, you get used to it. But the hard part about it is learning how to manage trades, right? So you have to figure out, how am I going to manage a trade based off of my trader identity? And I know my trader identity is not giving profits back. That's why like, people hate trading with prop firms because they got trailing drawdowns. That don't bother me, because I be locking in profit. The trailing drawdown ain't nothing but a tool that makes you lock in profit. You know what I'm saying? I be locking in profit. I don't care. It can, if I lock in $300, it can run off to be $1,300, and I ain't mad at all. You know what I'm saying? I be locking in profit. Give me my money now. Okay, that's why I locked in the profit. Now, based off of everything we covered, right? Right, everything here, everything we covered. Now let me zoom in here where we can see the price action. All right. Zoom in here. I'm gonna show you the price. Look at the price action closely. Now, because this is just how the chart was when I was trading it, right? Because I don't put everything on the chart that I'm watching, right? But give me somebody give me one of the two. Somebody give me one of the two signatures that made me want to take this entry here. Right now, mind you, I'm gonna give y'all some help. Right, it happened before here. No, let me see here. It happened before here, and because this is where, let me move this over. This is where I actually entered right there. That's my entry right there. Right. So it happened before I entered. Okay. And it happened after here, right? All right. What do you see in price? What signatures do you see in price? Right. And that's your, let me highlight your window. Ready? Go. Somebody tell me.
A SIBI that became a balanced price range.
Say again.
A SIBI that became a balanced price range.
You said a SIBI that became a balanced price range?
Yeah, right where you are. That one right there.
Hey, explain that to me. You said a SIBI became a balanced price range. Help me out with that. Because I see the SIBI. So where's the BISI?
Well, you need a BISI. I figured that green candle right across closed it up.
This
That
green
one right
candle
there.
here?
Yep. That's
Okay.
what I thought.
All
Closed
right.
it up.
You're looking at the right thing, but you're calling it the wrong thing. Right? You're looking at the right thing, but you're calling it the wrong thing. What did that candle create?
It inverted that
Inverted
area.
FVG.
Yes, it created an inversion fair value gap right there. Very good.
Okay. Thank you.
Marco went straight to it, right? So that right there gave us an inversion fair value gap. We closed just above the open, right? So that gave us an inversion fair value gap right to the very first thing, right? That was the very first thing I saw.
So what about that first BISI right there that you started the box with?
Over here?
Yeah.
That ain't giving me no reason to want to buy long.
Oh, no, I was just asking why you started the box right there.
I just said it happened. This is the range that you're looking at for the signatures.
Okay.
Right. Something happened in this area here that made me want to enter. You see what I'm saying? That made me want to enter. So, right, this right here was the confirmation, right? So this was the confirmation to make me say, okay, I'm ready to go. And I said, I'm entering. This is where I want to enter. Okay. I want to enter here. This was the confirmation. So now I asked for the 2. Now that's 1. What was the
you entered off of that volume imbalance that was created on the inversion?
Yeah, I entered on the volume imbalance. I got that, but the volume what so
rejection block on that red candle.
No, not the rejection block. That's cool. That not there.
No, not that one. That one right there. Nope. The one to the right.
This one?
Nope. The one to the left.
Oh,
the
here?
one in between. No, the one in between
here?
both of the ones. Nope.
Here?
Over. Next one over. Next one over. Right there. But the top portion. You said you got up. Where did you enter?
Here.
Okay, so 50% of that top wick of that red candle. Well, I'm just giving you the second one I thought was.
Yeah. That's why I say What's this right here?
What was your question? I'm sorry.
No, I'm asking everybody, what's this right here?
That's order block.
This is an order block.
Okay. But what happens when we trade above that price there? Right, we're coming down.
Oh, the change in the state of delivery?
Yes. There's your change in the state of delivery. There's your inversion fair value gap, right? And so I'm not waiting for the break in market structure, right? Why? Because I've engaged my sell side liquidity after this time, right? So if I'm on side, we shouldn't take that low out right there. Why? Because we engaged the sell side liquidity, right? We rallied up and then we dropped down and swept it again. You see what I'm saying? So we engaged, rally up, and then swept it. And once we swept it, right, now we got our change of state delivery and our inversion fair value gap. I'm starting to get bullish signatures. So now I want to enter in as deep in the price as I can. I don't have any imbalances there except a volume imbalance, right? I don't want to take the chance of waiting for the change of state delivery, because if I hit the volume imbalance and rally, it's not going to get me, right? So entering on the volume imbalance, I can put my stop here below the low that shouldn't be touched, and it's still within my risk parameters, right? Because looking at this right here, I'm only risking 8 points, right? And y'all know, as I said before, if I'm on the mini, I ain't never trying to risk no more than 8.75 points, right? I ain't never risking more than 8.75 points if I'm on the mini, because I'm like, hey, if I can't get it right within there, I'm gonna go to the micros if I need a bigger stop. You know what I'm saying? That's why I'm always trying to enter in on change of states of deliveries or small fair value gaps and stuff like that. That's a topic of a different discussion. But right, those are the signatures, right? That right there, I started getting bullish signatures here after manipulating that low right there, right? After manipulating that low. And this right here, that manipulation there happened 2 minutes before the macro window, right? It happened 2 minutes before the macro window. So when you're going into a macro, right? And that wasn't that, I didn't have that marked out so y'all couldn't see it. But now that you know, right? This is our mat. Now let me mark out the macro window, right?
Tim, when you're done with that, I have a question, please.
Go ahead and ask right now.
Okay, so at the 10 o'clock hour, when liquidity was swept, would that have been something you would have been eyeballing and saying, I could possibly have an entry to the buy side?
All right. I'll look at 10 o'clock in a second. I thought it was going to be something I could just answer right now, but
Oh, sorry.
I don't want to change the screen.
No, I understand.
I'll remember that and we'll get right to it.
All
okay.
right.
So going into a macro, right? The macro's job is to do what? Two things, right? What's the macro's job? To engage what?
Engage liquidity and manipulate too.
Engage liquidity and engage
Imbalances.
imbalances, right? Inefficiencies, imbalances, right? So its job is to engage these, but not just liquidity and imbalances. It's looking for liquidity and imbalances that have not been what?
Have not been revisited, I guess.
Yes, yes. Shout out Honey and Lump, even though Lump was guessing, right? It's looking for liquidity and imbalances that haven't been touched yet, right? Because remember, the macro's job pretty much is to punish people, right? It's going to move on traders that's right most of the time. Sometimes it won't manipulate them out, but its job is to seek that liquidity and imbalances that hasn't been touched yet, right? So we know that we here, right? We came into, right, liquidity for our entire dealing range, right? So for all intents and purposes, we have engaged a higher time frame liquidity. Okay, think about it in this sense. We've engaged a higher time frame liquidity here, right? So we've taken higher time frame liquidity here, right? So You got people that went long and put their stops here, right? They went long below this low here, right? And their stop is below here somewhere. And you got people that got short into the market and their stop is, let's just say there, right? Their stop is there. Now, as we're getting ready to come into the macro time, right? The algorithm takes out anybody who had their stops there because we just manipulated a higher time frame and rallied away from it. So people pulled their stops under here. The macro, the algorithm took them out, right? You can tell it's a stop run. Boop, we rejected off of it, stop run, and it happened 2 minutes before the macro started, right? We trade up and reprice this entire SIBI, right? So we reprice this entire SIBI, and then when the macro starts, right, we fail to take out that low, right? The macro's job is to seek liquidity that has not been touched yet. So we fail to take out that low there. We get a change in the state delivery, and then we get an inversion fair value gap. So coming into the macro, we're failing to take out this low, and we're creating bullish PD arrays, right? So that's why I want to enter in here, because I want to get in as deep as I can, right? I enter in here on the volume imbalance, right? Price wicks down into the rejection block right here, went down below that right there, but wicks down below all this right here, right? But we don't take out that low, right? And I got my stop below this low, because if we take out this low, I know, okay, I'm wrong. I'm on the wrong side of the trade. Why? Right? Why? Can somebody tell me why? If at this time here we come and take out that low, why do I know I'm on the wrong side of the trade? Just talked about it.
Because it's supposed to be a protected low.
Okay, and the protected low lets you know that what's been done.
We've taken care of the liquidity in that particular area, so we shouldn't revisit it.
And what does that? And what has been done?
Damage.
Damage has been done, right? You already took the liquidity. The damage has been done, so that low should be protected, right? So, and this right here is doing the damage. What do you mean by doing the damage, right? We hit a higher time frame liquidity pool, right? We manipulated shorts in right here, right? When we did, because hitting this liquidity pool, we already manipulated shorts in. Then after we did that, we manipulated shorts in going into a macro time, right? And then right here is letting them know that you're wrong, because we're failing to continue off of that fair value gap, right? How do you know that? Because we made this fair value gap breaking structure, right? That's a bearish signature. You're breaking structure, meaning breaking out of a external low and creating displacement, right? What is that? Right? That's you're falling victim to a false breakout. You're falling victim to a false breakout. That's where the turtle soup buys is. You're getting caught. You're inside the turtle soup right here, right? Because you sold it instead of buying it, right? You sold that breakout. Why? Because this is telling you, oh, we got displacement, so I'm going to buy that breakout, or I'm going to short off of this fair value gap. But that right there told you, oh, I'm on the wrong side. because we stopped without taking it. We immediately turned around, got a change in the state of delivery. Then after we get us change in state of delivery, we get an inversion fair value gap. If this was designed to keep price down, it shouldn't become an inversion, right? It becomes an inversion, right? And then we get one more dip just in case somebody was trying to put their low below the macro low, right? Right, because at this time, that's the macro low. One more quick dip to add insult to injury, right? One more quick dip, revisiting this old higher time frame low to pick up more liquidity, because that dip, that dip, that dip, that dip, that dip, all of those dips, that it probably ain't enough to pick up all the liquidity that's resting below that low, right? Because it's a lot, like the big money can't just get into all their contracts on one little dip like that, like we can, right? So we get one more dip below this low right here where they got their money resting, right? We get one more dip below all these equal bodies, because that close and that close, right? That's where the line traders, the people that put their stops at close, the people that use like the DOM, and they just look at, hey, what was that close? What was that closing price? Right? They're not looking at the wicks. They just look, what that candle closed at? What that candle closed at? Right? So they see this as the low here, right? That's the which one of these. Let's see which one of these lower. Right? They're equal, right? So that's the low, right? At that close and that close, that's the low. One more dip below that low right there, right? One more dip below that wick there in case somebody want to get below the macro low, right? Just a little insult to injury, okay? Right? Damage is done. Low should be protected. So you find an area in here that can allow you to put your stop below that low. Some people go one tick. I like to be at least a point below, right? I like to be at least a point below. Some people go one tick. You know what I'm saying? I like to be at least a point below. That's just me, right? And then the rest is history, right? Because we already talked about why I locked in profit. And then that was my target right there. I didn't reach my target because I got stopped out in profit. As you can see on the thing, it says stop right there. Stop one at 23.58.25 right there. And 23.58.25 is the prior day's low. So as soon as we went above, here, right, I grabbed it and moved it up there, right? And by the time I grabbed it and moved it, you see that we had already, you know what I'm saying, we opened and did something over here because it stopped me out on this candle, on this little doji candle right there, because I manually moved it, right? So because I didn't have it set on my ATM, because I got to go in and do math and be like, okay, if it's good. So I just manually did it. Once it went up there, I manually drug it up there to that price and dropped it. And then as soon as I dropped it, it took me out of the trade. I was like, oh, it is what it is. Right. So that was that. Thank y'all for y'all class participation. You said 10 o'clock. What about 10 o'clock? Say that again for me now.
I was asking for the 10 o'clock hour, do you see an entry in there?
From today?
Yes. Right when we swept liquidity at the 10 o'clock hour. And the stop would be right below right at the 10:06 candle.
What you looking at, like the 1 minute time frame?
Yes,
All right, so 10 o'clock. All right. We're looking at 10, like here at 10 o'clock.
And then when the liquidity gets swept at 10:06.
Okay. You said at 10:06. Right there.
Right.
Yeah, this right here.
Mm-hmm.
I need
You
more
need more
information.
than that?
Yeah, I need more information to see what's going on because it's like right now I'm too zoomed in and I don't even have a narrative based off what's going on. So let me come here and let's do this. Right. So I need to go back up. Let me come here and I'm gonna take off. That's 10 o'clock. It's 10:15. Right. So I take that off there. All right. So this is our dealing range here. All right. So we're coming down into the lowest fair value gap on this 15-minute time frame, and we're coming down to our lower quadrant in the discount. All right, so we're coming into a deep discount inside our dealing range. So we're in a bullish dealing range. All right, so we're looking for reasons to buy. We're coming down into the lowest imbalance in our dealing range, right? Got high resistance. So the only threat for a long right now would be a order block. And looking at where we are, right? We do have a order block there, but we have an order block there that we've traded into, and this little order block is inside that one, right? So this right here is going to supersede that one there for me because it's in this right here would be my order block, right? Because that one is inside it. So the only threat to this would be a order block below it, and this order block is right in line with it. So all right, that's confluence there. And then looking across here inside this breaker right there, right? We have a inversion fair value gap inside that breaker leg, right? So that right there. All right, we got bullish confluence, but so we got deepest fair value gap with bullish confluence there, right? With inversion fair value gap in the order block, right? All right. So now we've traded down into there. It's our 15-minute candle there. When that 15-minute candle closes, so that's during the time when you was talking there. Okay, so now boom, here we are. All right, so we come down here. Right now I need to see what did that do. All right, let's come back here. That's a 1 minute time frame there. Let's see something. This looks like some type of low here. Now let's see what that is on a higher time frame. Let's go 15 minutes. All right, yep. So see, I said that looked like some type of low, and it is. So that's your low. That's your sell side liquidity from the 15-minute time frame right there. Right. And then we have another 15-minute low here. Right. That low is right at the fair value gap, but this right here, that's your low there on a 15-minute time frame, because this low took out that low, so that's your low there. And then we have another low there, right? Because this low was already swept, so boom, him, then that's your next low. All right, now we got everything marked out from the 15-minute time frame. Okay, so now looking at your from your higher time frame, right, we have our liquidity, right? Because we always want to know where our liquidity is. We got our I can move this other stuff out the way. I don't know what that is for. All right. So now we have our liquidity, right? Our sell side that we're trading down into. Okay. Right. Price goes up. Take out. Buy side. Here. We drop down. Right. And engage. Sell side. There. Right. Trade back up into the order block. Then we drop down, engage the other sell side, and we hit our discount PD raise, right? So all of this right here combined is our anticipatory reactionary point here, right? With the sell side and the liquidity. All right. So now that we have that there, right? So now I can move this out the way. So we touch the sell side, boop, right? Trade up into the order block, come down, sweep the sell side there. All right. So, all right. So we go there, we sweep the sell side there, and we go up, and that right there, that there is our change in the state delivery here. Right. That's our change in state delivery. That's our order block there. Now look, now looking over here, we almost got an immediate rebalance there, and we got a fair value gap here. All right. So we got a fair value gap, bullish fair value gap, a change in the state delivery. Right. So bullish fair value gap, change it, bullish fair value gap, changing the state delivery right there. Now, if I was bullish and confident about this right here is enough confirmation for me to take a trade off of that fair value gap right there, because we've taken the liquidity, right? We've traded into the lowest imbalance, traded into the inversion fair value gap, right? And we have swept liquidity here, right? We came down into the liquidity inside the macro time, right? So in the macro time, we took out liquidity and then we manipulated here, right? So we got manipulation there. And then this right here, that change in state delivery and that fair value gap based off of like the higher time frame narrative, that right there is enough for me to say, okay, we're going to go back up, right? Now, if you wanted more confirmation, right? Trading above that high right there will give you a bullish break in market structure, on the 1 minute time frame. Trading above this high, maybe like a 5 minute. I'm not sure. I'll have to look at the 5 minute. Right. No, that actually would be trading back into a SIBI. So that right there would be, I would be trying to take some profits there. I wouldn't be looking for some kind of confirmation. If I didn't enter down here, I would be looking for that. And then now looking at the 5 minute, right? Got an inversion fair value gap on the 5 minute time frame. So that's a little bit of confluence there. All right. So now that's what I see. Now let's see how this plays out. Whole bunch of doing. I ain't even holding it that long. There's the target or the trailing, but I ain't even holding this long here. I ain't even all of this here. I ain't even holding this long here. All once we it after this pullback here didn't take me out from that low there. Once we came back up here, started doing around there, I'm gone. I ain't even trying to hold it that long because I don't. That's just me. I don't like sitting in trades this long. But
yeah, that's what I did. I sat there, but it made target, but I sat there and went through all that drama before it hit it.
Yeah. So yes, based off like I say, like I can't just come in here and be like, oh yeah, I see something there. I don't play them games. I go look at the price and I'll be like, based off what price is saying, this is what I see. That's what if you know what I'm saying, for anybody who looking and listening, like, man, why are you going through this long narrative? Because I'm just giving it to you off what the price say. I ain't just gonna come in here and be like, oh yeah, did. No, I'm gonna go through and let you know what I actually see. That's why I erased everything off so we can't have hindsight bias and actually look at what price telling us.
Right. But it looked good, right?
Yes.
Yeah.
Yeah. It's just one of the things where we like we had so much movement coming into 9:30. And I talked about this, I think Monday or Wednesday on the tape reading. I said it's been a long time since I've seen like good price action in the morning and good price action in the evening, right? We get like one good move in the morning, then a bunch of trash, then the afternoon to be trash, or we get a bunch of trash in the morning and the afternoon to be good. But it's like we get one nice move. And if you didn't position yourself early, you're stuck in this right here, painstakingly trying to get back to your targets, right? And when I hopped over there to the ES accidentally, this right here made me, this is going back to what I talked about when I said trade what you see, not what you want, right? This is the ES price action today, right? Made new all-time highs, went back to last week's high, right? This is the YM, right? Took out prior day's high, right? Took out prior day's high, right? Acting like it's trekking toward last week's high, right? But the NQ, on the NQ, we took last week's high out yesterday, I think. Was it yesterday? Yeah, no, day before yesterday. When did we take the high out? We already took that high out on the NQ yesterday. Yeah, we took it out yesterday. Right. So what do we have there? What do we call that?
Inside day?
No, not inside day, but these two, the ES took last week's high, the Dow hasn't, and the NQ took it yesterday. What do we call that?
Divergence.
What kind of divergence?
Bearish.
Bearish divergence, right? So when we have divergence between the correlated markets, right? The markets are decoupled, right? And what does that decoupling do? That decoupling causes what? Causes high what?
Volatility.
Yeah, it can cause volatility, but it causes high what?
Resistance.
Yes, it causes high resistance, right? It causes high resistance when the three sisters aren't playing nice together, right? Somebody gonna give you some high resistance, because if you look at what time is right here, 9:30, right? Let's go over here to the YM, put it on 15-minute charts, and we're gonna add the ES and the NQ. All right, gonna add the ES and add the NQ. Right, and let's go find 9:30. What's 9:30? 9:30. Look what happened at 9:30. Right, at 9:30. Right, at 9:30, the NQ went down, the YM went up, and the ES was stuck in the middle. Y'all see that? All right. When they add odds, right, it's gonna create that high resistance in that chop slot, right? Because they want to do the same thing. They want to do the same thing. They're designed to do the same thing, right? Remember when we put up the heat map and we show how the companies that's in here and the companies that are in here are also in here? They're designed to do the same thing, right? So if all of these got common companies, right, they want to do the same thing. But when they're doing opposite things, you're pulling it in, you're pulling the same companies in different directions. So if all of them want to go up, excuse me, because we're in a buy program, but this one is going down while this one is going up, it's creating this one to consolidate more. So then when this one finally starts trying to fight back and come back this way, right, it's making it very difficult to move, because we're not getting like the same, like in a perfect world, right, every candle be the same color in a perfect world, right, in a perfect world. But anytime when they're not moving in unison, right, and this is just a 15-minute chart, right, but anytime they're not moving in unison, this right here, this is a cracking correlation. Why? Right? Because if you look, this one is a down candle. This is a small green candle. This is a bigger green candle. Right? That's a cracking correlation right there. Right? This is a red slash doji. This is an actual doji. Right? And this one is a red slash doji. Right? Cracking correlation. Even during indecision, we still got a cracking correlation. You know what I'm saying? And then as soon as they look like they're all on the same path, right, over the next 30 minutes, something happens. Right? This one going up, this one going down, right? Cracking correlation is creating high resistance all up in here. All and what time is this? This is from here over to here. This is your New York morning session. This right here starts at 12 or that's lunch. So you got all of this divergence during the New York morning session, right? All this divergence during the New York morning session, right? And then once we get after lunch, it kind of levels off some and gets a little, it's being held in a range, but the divergence is not as bad, right? Because everybody is pretty much doing the same thing. After once you get into lunch and going to the afternoon, still not pretty price action. It's being held in a range, right? But it's being held in this range after this huge move, right? Which is expected. You got a big move. Now you're just kind of hanging out. right? But where is all that manipulation at? What we talk about, the most manipulation happens in that opening range, that first 30 minutes. And look here, from 9:30 up until 10, right? I can't make this stuff up. You see what I'm saying? And today was one of them days where it was highly manipulated. Why? Because we got this extreme divergence here. And while the Dow is running off to the daily high, right? The NQ, right, is running away from the daily high, right? This is the daily high right here. The NQ running away from the daily high. And the Dow is full steam ahead running to the daily high. Right. Same thing with the ES right here. 9:30 is it's an hourly candle, but put it on 15 minutes, right? Get around 9:30 right here, right there, right? You dip down and go up. Right. The NQ is going down. It's heavy on the ES. The Dow going up. It's heavy on the ES. So it's which way do I go? Okay, I'm gonna take some sell side, then I'm gonna go. But the Dow was just dropping up into 10 o'clock, right? The ES, right? It dropped. Then 10 o'clock, it turned around and rallied, right? Because the NQ pulling it down, but the Dow pulling it up, right? High resistance, chop slop. Hey, man, we done been on here for 2 hours. I didn't even get a chance to really talk about the price action today, but hopefully y'all found value in this. Hopefully y'all found value in this. Do anybody got anything for me? Any other questions or any other comments? Tim, price action king Rogers. hey, I appreciate that, Monica. Hey, for everybody that was typing in the chat, I'm sorry, man. I wasn't looking at the chat. I wasn't looking at the chat. That's why I'd be like, just click on the Zoom link and pull up and talk, because the chat is here, right? And I'd be looking at this screen. So it's like to keep looking back, that'd be killing me. All right. Ain't nobody say nothing. I don't see nothing in the chat. So we're gonna go ahead and call it there. Before we get out of here, one more time for the road. For those who missed it in the beginning, right? If you don't know, I got the Smart Money manuscript coming out on August the 6th. Smart Money manuscript coming out on August the 6th. And I like to share that with y'all one more time before we get out of here, but I got to share my sound. All right. August the 6th, Smart Money manuscript coming out August the 6th. I'm gonna let that play and then I'm gone. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money manuscript. But Tim, what is the Smart Money manuscript? The Smart Money manuscript is your roadmap to financial freedom. That's right, your roadmap to financial freedom. Inside, we're going to be discussing things for absolute beginners who never even heard of the stock market or don't know what the stock market is. We're going to teach what is the stock market, what is a stock, what is an index. We're going to teach all of that. We're going to talk about options. We're going to talk about futures. We're going to talk about fundamental analysis, technical analysis. Speaking of technical analysis, we're going to take a deep dive into the ICT concepts. We're going to discuss how to figure out how much you need as an individual to save for your personal retirement. We're going to talk about retirement portfolios. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money manuscript is for you. It's dropping on August 6, 2025, which is my birthday and my youngest son's birthday, for $69.99. Yes, $69.99 for all of this here. Mark the date, set it on your calendar, remember it, and I'll see you on August the 6th. Hey, y'all enjoy y'all night, man. Gone.